Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's keep up with our analysis of the euro currency. Situation barely has changed here. So actually market has shown only some minor downside continuation, so everything that we said about possible immediate downside actions were very small. Possible retracement actually has happened. But today, since the Federal Reserve starting its today's meeting, so if you're not a breakout trader, you're probably better to do nothing. So if you do not have open short position, for example, at the current point, I wouldn't suggest that this is really good background for taking new positions. If, of course, you do not want to bet directly on the results of this meeting. Speaking about the Fed, economy background suggests that there should be no action. But some traders suggest that, well, since the coming confrontation between Donald Trump and Jerome Powell concerning rates, Fed could consider rate cuts. So probably we will see it in the Fed minutes that will be published within the month, next month. But that might be. At the same time, I am not sure that this definitely will happen. As people told about actually recent Nasdaq collapsed, so maybe on the ground of the weakness of the stock market, the Fed could take this step and cut the rate. I think that's not enough. So in general, the Nasdaq has not dropped really strong. The Nvidia has dropped significantly, but Nasdaq has lost approximately 3%, so it's not really a big amount. Second, recall what has happened in August when Japan has risen rates for the first time. It also was at the eve of the Fed meeting, and their collapse was significantly stronger, and consequences might be also more epic. But Fed also did nothing. So from that standpoint of view, I suggest that hardly they will change the rate, but as a reference to the Donald Trump side, they could bring some verbal, not quite an intervention maybe, but some verbal weakness in overall assessment of the situation, some verbal dovishness in overall comments. There's a contribution to the Donald Trump position. So theoretically, this might happen, but this is just the gambling. So we do not want to trade this. That's why we're not considering seriously the betting on the results of the Fed. Currently, if we take a look at the cross-market analysis, everything stands in place. So first of all, on the dollar index, grabber is still valid. It's still possible. Today is already Wednesday, so it's just 2-3 sessions until market will close here, and we will see whether we will get it or not. On the 10-year bonds, yields mostly stands in the same range, showing some downside action, but mostly they stand around 4.5%. And the situation hardly will change until the Fed minutes results. In general, we are watching for the same pattern. As market hits the neckline with this pullback here, forming on the right arm, it will be some pressure on euro currency, and it also confirms the idea of the possible deeper retracement in euro. So if we wouldn't have the Fed today, I would say so. Let's keep watching for chances to go short. On the lower time frames, on the follow time frame chart, here is what we have. That's minor downside continuation has happened. Mostly market stands flat around the same support, 104.30. Next strong support will be 103.67, 103.96. This is confluence support area. And if market will drop on some results of the Fed, probably that might be somewhere the target on this. On the hourly chart, that's the resistance levels as usual. So if you would like to take the bet on all this stuff and trying to trade the Fed meeting, you probably could use this consolidation, which is very comfortable, and use stop entry orders outside of it. So stop buy, for example, might be placed around 104.43, right around a few pips below the top, but including the bid-ask spread, so make the discount on the entry price on this bid-ask spread. If you're buying here and Fed will set something dovish here, you could get the breakout and upper continuation. The same you could use for downside using stop sell order. Once again, a few pips around it. Or maybe in the case of the downside breakout, you could place it even slightly outside of this range and see what will happen. Besides, both orders could be placed simultaneously. They are not mutually exclusive. So if one trade order will be executed, the another one might be just stand without an execution. If, of course, the volatility will be not too significant that will hit the both orders. That just in two words, in theory, how you could act if you would like to make a bet on the Fed Reserve results. While we're not considering this, we keep mostly the same trading plan. So those who take in the short positions currently could move stops to the break-even, see what will happen on the Fed, and if we will get some pullback here, we will see what it will be. Watching approximately for the same levels. First one will be 104.60 confluence, next one 104.60, 104.86. So probably we'll return back to this question tomorrow and see what will happen.